This conference will now be recorded.
Very much apologize for the short time turnaround to get this one out there because we kind of just tossed it out there in the wind. Um, but kind of the issue we ran into was that as you know, with this round three coming out, we had a lot of questions from folks who didn't understand various parts of it, mostly around the revenue piece. And so we decided that it might make sense to throw another forum out there and kind of talk it through with everybody. And so um, Kelly Mooney with SHP is going to do a lot of the talking. I'm going to color commentate for her. But basically, we're going to walk through the details of what is required to go through this new round of funding and the timing required of it, and kind of give you a look at what the portal looks like, et cetera, et cetera. And so um, please stop us if you have questions, chunk of questions in the chat room there. We'll answer them on the fly as we go through this. And so keep it real interactive, and we'll try to keep it flowing. With that, I will toss it to Kelly. Kelly.
Good morning, everybody. So as we sent out the reminder about the upcoming application deadline, to Mike's point, we received several questions back. So really want to do this informally, open it up for questions at the end, but feel free to throw them in as we go along. So HHS in early October had obviously announced they were getting ready to do a third cycle for general provider relief funding. And so part of their goal through this new $20 billion allocation was to include provider types who had been excluded from all previous cycles. For instance, practitioners who started first practicing in 2020. Everything else had been limited. You had to have practiced and billed for services in 2019. And so what we know about the distribution methodology at this time is that their first priority is going to be to ensure that all applicants have received at least 2% of their net patient revenue in relief funds. So priority really is going to be given to entities who haven't yet hit that 2% through the first two general distribution, which would include any new providers for 2020. Now, what we know is once that priority is met, a phase 3 allocation will be made contingent on the total number of applications received. We don't anticipate that all providers are going to be doing phase 3 applications. So they're going to look at the pool of applications to determine what that phase 3 allocation is going to look like. The general formula that they put out there, providers are going to get a percentage of their change in operating revenues from patient care minus their operating expenses from patient care. So as we get into the revenue section, there's some specific information that we'll talk about as it relates to that. And particularly for hospitals who have received more targeted distributions like the safety net, rural facilities, COVID high impact, those distributions will factor in to any phase 3 allocation that's made. So not super defined at this time. Once the portal closes tomorrow, HHS knows what the application pool looks like. We'll likely see more information about what the phase 3 distribution methodology is actually going to be. So next slide. So for very generally speaking, this is open to anyone who's already received a general distribution in rounds 1 and 2. For our previously ineligible providers, those will include anyone who began practicing in 2020 and has billed Medicare, Medicaid, private insurance starting 1/1 or later. It's also expanded to a group of behavioral health providers who have been faced with confronting an emergence of increased mental health and substance use issues that have been exacerbated by the pandemic. And it also includes providers who do not bill Medicare, Medicaid, or CHIP, may only bill private insurance, may only be self-pay for patients. So it's expanded the eligibility pool. Next slide. Getting down into more of the specifics, and we won't go through all of this, but you'll have to meet at least one of the following criteria in order to be eligible for an application. So build Medicaid or CHIP programs, build a health insurance company or health-related services, build patients for dental services, build Medicare, a Medicare Part A provider that has experienced a change in ownership, state licensed or certified assisting living facilities, behavioral health providers who has billed an insurance company or does not accept insurance and has billed patients for services, or received a prior targeted distribution. Again, that would be the high impact safety net distributions that HHS has already made. Next slide. And these are the criteria. All of these must be met to qualify. To have filed a federal tax return for 17, 18, or 19, or be exempt from filing a return. You have to have provided patient care following January 31st of this year. That you have to still be operational, that you are not permanently closed from providing patient care. And for individuals providing care before January 1st, you have to have gross receipts or sales from patient care reported on a Form 1040 or other tax form to the IRS. So previous slide, you have to meet one of the criteria. On this slide, you have to meet all of the criteria in order to be eligible to apply. Next slide. So when? Obviously opened October 5th and closes tomorrow, which brings us here today. As we'll link the slides, we link the application in here. And as a reminder, even if you submit an application for round 2 of general relief through the same portal, you will have to complete a brand new application to be eligible for round 3. You'll have to re-go through the entire process. Next slide. Okay, as we get into the specifics, have there been any questions or any questions that came in via the chat?
Not that I see, Kelly.
Okay. So first step, you'll go to the previous application link, and your first step will be validating your TIN. So some of you guys may have a recognized TIN already in the Optum system that HHS is using. And so it'll be immediately validated as you'll have previously used it. If it's a brand new application, it'll most likely come up as an unrecognized TIN that you guys will have to go through the 3-step validation process. Now, as you guys can see in there, the TIN validation process can take up to probably 25 days. So if you haven't started that process, it's critical to start it immediately. And if you go to the next slide, if your TIN validation is not complete by tomorrow, you have to have documented that you submitted for the validation within the same time frame. You have to submit validation by November 6, 2020. And then you will have until November 27th to complete your application following the TIN validation. So there's still a window, but it's critical. If you have not yet started that process, we'd recommend starting it as quickly as possible. Next slide. So basic standard organizational information that you'll need to gather for your application: your practice name, TIN, MPI, your address information, contact information, banking information, and if applicable, your CMS certification number, which should mostly apply to hospital providers that are applying. Next slide. Okay, and here's where we get into where HHS has shifted from their previous application cycles. So we've talked about gathering your revenue information. So your most recent federal income tax return or relevant tax document. We'll talk about that a little bit in the next slide. You'll report your overall revenue reported on your last return or financial statement if you are an entity that does not file a tax return. You'll have to input the fiscal year that you were reporting that information for, i.e. 17, 18, or 19. and your percentage of revenue from patient care. And we'll talk about a little bit of the exclusions that go into that.
And
So
Kelly,
one other, yes.
Kelly, one point to add is that, we've already had an example. There was a similar question on the prior rounds, and we had a provider who skipped over that question and just left it as 0. Well, the whole thing was denied because it came through as if they had that none of their revenue was patient care related. Therefore, the entire application was ineligible for that one answer. And so just be very careful. And she's going to cover the exclusions, but it's going to default to 100%, and then you got to find areas that don't qualify rather than having to build up from there. And so the assumption is going to be everything you do is patient care related, and then go from there. Sorry, Kelly, go ahead.
Oh, no, thank you. So there's one other caveat that will require some additional supporting documentation. If there has been any change in ownership reflected in 19 or 20 for your entity, HHS is going to look for a separate revenue worksheet, which we've screenshot in a slide down, to walk through that acquisition or disposition of an entity. So you'll need that if you fall into that qualification. And then previous cycles of applications have focused more on really lost revenue estimates. HHS didn't clearly define how they wanted that categorized, so there was a lot more freedom in terms of defining what your anticipated lost revenue. We obviously all know that HHS has come out with their final sort of reporting guidelines that we're tracking for early 2021. And we think as a result, they're a lot more prescriptive in the information that they're looking for to document a change in income and status for quarters 1 and 2 of this year. So what they're looking for is your operating revenues from patient care for Q1 and 2 of 2019, and then your same period for 2020, as well as your operating expenses from patient care for the same time period. So they're really focused on reporting Q1 and Q2 of 2019 and Q1 and Q2 of 2020 to do a baseline comparison. Mike, anything to add before we move on?
No, keep going. I'm certain that's going to drive some questions because, there's a lot of different ways you guys are reporting that. And so it does imply that you stay on your same accounting methodology to use that. If you're on cash basis, you'll use cash basis. If you're on accrual basis, you'll use accrual basis for that. But keep going. I'm sure we're going to run into some questions on these next few slides.
Okay, so how has HHS defined patient care revenue? Rather than sort of defining an inclusion, they have excluded categories from it. Insurance, retail, or real estate revenue, unless you're a nursing home or assisted living facility. Pharmacy revenues, except for those derived through a 340B program. Grants or tuition, your contractual write-offs from third-party payers, any charity care adjustments, any bad debt adjustments, any gains or losses on investment, and any of your prior HHS relief funds that were received in 2020. One other FAQ that we did find on the HHS site today is that if you have revenue based in DME, or for instance, the sale of contacts or glasses, those should also be excluded from any patient care revenue definition.
Yeah, and this touches on one of the questions that just came in, is that for a physician practice, the basic assumption would be that 100% of what you do is patient care. And I think that's true. I think what's not clear in here is I have a medical director agreement, and I need to know whether or not that revenue needs to be excluded, as not being patient care. It would appear to be excludable, but not 100% clear there. And then for the CSBs on the phone, the definition of grant per se, you'll need to think through whether or not that if it's a grant for ongoing services that are just block paid, I would argue that's patient care. If it's grants for other researchy kind of things like that, I think that's what they're intending to exclude. Go ahead, Kelly.
Okay, next slide. So that was the revenue. Now they're also looking for expenses attributed to patient care. And they've done this with some inclusions and just a couple exclusions. So they're specifically looking for salaries and benefits, medical supplies for the practice or hospital entity, salaries for contracted and employed physicians, and any interest and depreciation on building and equipment used in the provision of patient care, homes, assisted living facilities. The only exclusions that they've specifically outlined can be attributed to patient care expense or any cost incurred on rental properties or contributions made, gains, and or losses on investments.
Kelly, we got a question back on the revenue page, but don't go back there. Whether or not incentive payments, PMPM type payments, whether or not they qualify as patient revenue. And I don't see an exclusion category for them. And I would argue that that is additional revenue that has come to the practice. And so it is generally in your best interest for that money to count, as long as it counted in last year and you can show the reduction into this year. So, but I think the answer to the question is absolutely that is considered patient care revenue. So
yes, because it's tied directly to the provision of care to that patient. And so, yes, we would recommend including it.
Got it.
Okay, next slide. So just to touch on this briefly, this is a screenshot of the revenue worksheet that needs to be uploaded in the HHS portal if there's been a change in ownership reflected for your entity in 19 or 20. So, we'll also include this link, but this is to reflect any adjustments from the acquisition or disposition if there's been any change in ownership. So next slide. So in terms of the most recent tax return, now we're moving on to collecting all of our supporting documents that HHS is going to look for you guys to upload within the portal. So they've outlined for tax purposes what exact document they are looking for. And again, it's going to be your most recently filed or most recently prepared financial statements based on the entity type. So walk through which each of those are. Mike, were you going to add something?
No.
Okay, next slide. So again, revenue worksheet if applicable. Now they're also looking for supporting document for your operating expenses and revenue from patient care for the time periods that you are reporting on. So 2019 Q1 and Q2, your patient care expenses and revenue, and the same for 2020. HHS doesn't fully define what information they're looking for. The caveat that they provided is that it could include internally generated financial statements. So Mike, do you want to talk a little bit about that?
Yeah, it's like I was saying before that, for most of y'all, like if you're a practice and you file your quarterly taxes, then there's some document where you're doing an estimated tax, but that's not everybody. And it's certainly not for the CSBs and all the nonprofits. And so the supporting documentation will be your internal financials for that, for Q1, Q2, both on the revenue and the expense side. And like I said before, can't switch methodologies in order to sort of game the system. It's very clear that whatever your accounting methodology was leading into 2019, that's got to be the methodology used for the Q2, Q1 19 and the Q2, Q1 20 reporting in there. So very much have to keep to that. That's all, Kelly.
Okay, next slide. So the last couple slides will deal with some nuance depending on if we have any providers that first started operation in 2019 and 2020. So for providers who may have begun rendering services in 19, you may have some periods where HHS is looking for information that you are not a practicing provider. So we walk through if you first began practicing patient care January 1st to March 31st of last year, you're going to enter 0 into that revenue portion in the application. And then similarly, if you began for the first time April 1st of 2019 through December 31st of 2019, you're going to enter 0 in that information, and it's going to let them know about what periods to include when they're looking at it. And the assumption is that they are going to annualize out from that depending on when you started practicing, but they haven't fully defined it. Similarly, for the expenses, there's similar guidance there. Next slide.
I think there's going to be a lot of sort of embedded questions that you guys are going to ask. And I meant to say this earlier about, well, how are they going to use that data, and how does this input going to impact the final dollars? How's that impact? That's where the guidance is terribly short. And so, whereas Kelly's saying the assumption is this, assumption is that, there's a lot of that that's not defined in here. As she said, kind of opening comment, there's a lot missing from how do you translate your inputs into dollars later on, other than if you haven't done anything thus far, 2% of your revenue on your last tax return would be the presumption. And so, not to quell some questions later on, there's a lot of that we don't know. Sorry, Kelly.
Oh, no, thanks, Mike. And so in terms of your supporting documents, obviously you may not have the relevant period for anything that you've entered 0 for, depending on when you started operating. And so for supporting documents, they're just asking you to submit a letter in any of those fields indicating when you started providing patient care, so that they're not looking for additional information there. So next slide. For any of our brand new providers who open their doors 1/1 of 2020 or later, within the application, obviously there's not a historical revenue number to input, so they're looking for that to be a $0 entry, and then to enter 2020 new provider for your fiscal year information. For your operating revenues and patient care, still looking for $0 entries there, and then to include any operating revenues for the portion of time during which the applicant was delivering patient care. So if you're only open on March 1st, to include 1 month of operating revenue for that period. Next slide. And for your federal tax form, similar to the 2019, they are looking for an upload of your Q1 and Q2 quarterly tax returns for that fiscal year, as well as a letter indicating that there's no federal return based on when your facility or provider started rendering care. And a similar cover letter for your operating revenues and expenses from 2019, as those would not be applicable. Next slide. So I know that we had touched on this, but in terms of timing, we unfortunately really don't have a great understanding of how long it's going to take HHS. They haven't started processing anything, and won't until the portal closes on November 6th. And as we've seen in previous application cycles, they've moved the deadline back. Don't know if that's what is coming down the pike for this one, but sort of all of the previous application cycles have been extended. Definitely everyone should be getting it in, but if they do extend it, it will push back the eventual phase 3 distribution. And once your payment is received, standard attestation to the payment receipt and terms and conditions. I know we've talked about it ad nauseum, but any of the funds have to go through preparing or treating for COVID-19 cases or offsetting lost revenue. And any phase 3 allocations will be included in your requirements for HHS reporting that are going to be due in 2021.
I guess a couple of points to add. One is we've had a lot of discussion with all you guys about, okay, I've gotten, my money from the past. I'm not entirely sure I can justify what I've received. Therefore, I'm not sure if I should go through this round. Our typical take, everybody's situation is different. Our typical take is that a fairly broad view of the expenses and a longer term view of the whole thing pushing out to 630 I would lead us to suggest that because we don't know the future, I would rather get the dollars in and then determine whether or not I can justify it by their reporting requirements rather than never get the dollars in the first place. So, make your own decision. But that's kind of been our basic take. Beyond that, there are a couple of questions that did come in earlier, which is a couple of really good questions. One of you guys asked, if you're eligible for the third round, although you missed the second round and you received a distribution from from round one, the Medicare round, way back in March and April. The answer is absolutely you are. And so the fact that you didn't get round two money or didn't file round two application does not mean that you should not apply now. As a matter of fact, in that one instance where I was telling you guys before that we had a provider that turned in a 0 on the patient care number, when we called HHS to find out what to do about it, they said, don't bother trying to do anything on round 2 again. We'll catch you up in round 3. Therefore, just file through this round and we'll handle it from this round forward. So there's that. And then the other question that came in subsequent, which is an equally excellent question, is it says on field 10 on the application, the revenue section, if that's going to be from our 2019 1120S from there, and obviously their 2019 is their last tax return, then field 12, the percentage of revenue from patient care, is what percentage of that top number on your tax return is patient care related? And that answer is absolutely right. And again, I'll reiterate that for the bulk of y'all, that would be 100%, unless you have anything, any of those exclusions that Kelly was talking about captured inside your practice. Like a lot of the real estate stuff, the physicians on the phone, you guys have that in a separate corporation typically. And so that's already not in the revenue on that side in the first place. But I know each of y'all are different. So all of that said, I guess we'll end here. That I know that's drinking from a water hose, and I know we're working off of a very, very short timeline, but we're here for you. And so if y'all have any questions as you scramble around and try to get this information in, holler at your rep, holler at Robin, holler at any of us, and we'll scramble around to do what we need to get your questions answered as you walk through the portals. And so we're here for you. We'll do whatever we need to. One last point is that just, that to make, is that if you already have your relief funds, consider putting the funds in a separate bank account and remind them that you do have the next 6 months to spend all that and to justify the spending for that. So unless there are any more questions, thank you, Kelly. Great job. We really appreciate it. And if anybody else has any questions, then holler back at us. Just give us a call back. But thank you for everybody's time, and we'll let you go. Thank you very much. Bye, y'all.
And just a reminder, the slides and the recording of today's meeting will be posted to our website as soon as it is available to do so at shpllc.com. Have a great day.